Hello, today is March the 19th, 2016. We had some MEJT targets from Thursday's patterns. I said there was an increased risk of failure, and all we had to do was promptly take out Thursday's high, which is what we did. I'll come back to this later. During the day, MEJT said this drop was a false move and that this price would be hit after this time, which it was on the nose here. Nothing new from MEJT, but let's look at some other things. We have a gap up, a new high, and we're unable to close over the early morning highs. It's a negative pattern unless this high is promptly taken out Monday at or soon after the open. We have a number of things indicating that this rally is going to retrace completely. One, we have a large number of failed MEJT targets. As I've said, this happens once or twice a year. I've seen 10 failed targets in close proximity a number of times. It means you're in a strong impulsive move, but the system's nearly 14 years old and they've always printed it sometime in the past. We get an average of about 3 failed price targets per year. Well, this was the DeMark sell signal, the combo and the sequential on the 130-minute chart. I was ignoring it. If the signal fails, it should fail in grand style with a big rally. That hasn't happened yet, so technically it still is alive. We have a pretty reliable FOMC whipsaw that says from the point of the FOMC announcement you're going to get 3 legs. The first leg has gone so high that if we get the second leg at its expected length, which is further away from the point of the announcement than leg 1, we should go under 1971.42. So if we do get a drop here, it should be significant, but the signal also says we get a leg 3, which goes higher than this high and further away from this price on the upside than any correction goes on the downside. We have gone over this 89-week moving average on the weekly chart. Just going over it a little doesn't mean too much to me. It's a time to look for a reversal. This was my old count. I'm going to have to get rid of it because if it's correct, then this is leg 4 and this should be wave 5, which should count as a 5-wave pattern. But all these rallies are coming in 3s. That's a 3. That's a 3. That's a 3. Well, there aren't too many patterns that will give you rallies in 3s. And the only way I can make this thing fit is if this is wave X. Here was what I'm calling the end of wave 3. Here's your ABC, which is a W. If that's an ABC for wave X going up at Friday's high, wave C of X is equal to 61.8% of wave A of X, and wave X itself is a 78.6% retracement of this leg C down. If this count is correct, it implies that we're still in wave 4, that we're going to probably have another 3-wave consolidation here, which should take months, followed by a leg 5 up, a wave 5 up, which because of the length of wave 3 is probably going to truncate. This whole consolidation followed by a last-ditch rally should take months. I don't think we are ready for a drop right here for some other reasons. One is that we continue to have expanding breadth. This is the percentage of stocks with favorable chart patterns. It's still going up. It's actually higher than we were last year. But if you look at the trannies, well, that didn't work. Let's go back. If you look at the trannies, well, I don't have Bollinger Bands here. I wanted to. This last day's action here on the transportation index, let me see if I can show it this way. It's completely over the upper Bollinger Band. That's not good. It's a sign of an overbought market. It doesn't have to reverse right at this level, but if it does, it's a sign of a top and probably a significant one. If so, we're going to have an ABC down lasting months, a wave 5 up lasting months, and then start dropping. It wouldn't surprise me if this drop were in full force during the period of the presidential election. And when the market is dropping during a presidential election, it's a pretty good bet that the incumbent party is going to lose. So as far as Monday is concerned, we need to go over this high promptly if the rally is to continue. If not, and we drop, it could be a consolidation lasting months, and the original target is about 80 handles lower than we closed on Friday. And that's today's call.